The Reserve Bank of Australia has kept the cash rate on hold at its March board meeting today. Joining me now is business reporter Edward Boyd. Ed, what were some of the highlights of the Governor's statement?
Well, Andrew, as expected, the RBA has kept the cash rate on hold, 0.1%. That's record lows. They've kept it on hold for, well, they haven't lifted the cash rate since 2010, and it's been on hold for the last couple of years at this record low level. Today, the Governor of the Reserve Bank, Dr. Philip Lowe, in his statements talked up the strength of the Australian economy, says it's in a pretty good shape. He talks about how they're still expecting the unemployment rate to fall below 4% at some point this year. Also believes the economy is growing pretty strongly as well. They talk about wage growth quite a bit in the statement today, basically saying that wage growth needs to be higher before they want to lift the cash rate, and inflation needs to be between 2% and 3% for a sustained period of time before they raise the cash rate. And the reason inflation is not at that level at the moment is because it's being artificially propped up by high petrol prices. So the RBA say those petrol price pressures are going to start to decline over the next 12 months and inflation is going to start going back down again. And that's why inflation's high. So once petrol prices ease off, who knows when that's going to be? Inflation will be back to a more regular level. But the RBA is watching things closely, and there's a lot of things changing in the economy at all times, but they're ready to provide more monetary support if needed. But for now, the cash rate's staying on hold at 0.1%.
Interesting forecast on petrol. Did Russia's invasion of Ukraine get a mention?
It didn't get a mention last month, but this month, the Governor of the Reserve Bank has actually mentioned the Russia-Ukraine tensions, and it's actually in the second paragraph of the statement, so it's very high up. I'll just read you a little bit of what was said here. The war in Ukraine is a major new source of uncertainty. Inflation in parts of the world has increased sharply due to large increases in energy prices and disruptions to supply chains at a time of strong demand. The prices of many commodities have increased further due to the war in Ukraine. So, for example, the price of oil is now over $100 a barrel. That's Brent crude oil, highest level in 8 years. Gas prices and energy prices in Europe are particularly high too. We've also got the price of wheat. Ukraine and Russia are two of the biggest producers of wheat in the world. About 30% of the world's wheat gets exported out of the Black Sea region. So there's a few things in Europe that are pushing up prices over there, and it's resulting in higher prices for certain items here as well, mainly oil and petrol. So it's not going to be long, Andrew, before we see unleaded fuel in Australia at about $2 per litre. So that's definitely one that the Reserve Bank is going to be watching closely. But as I said before, they think inflation's being propped up by these petrol prices, and they do expect inflation to come back down again within the next 12 months.